How is Jerome Powell and the Federal Reserve going to shape the stock market that comes before us? How are major mega cap earnings from Meta, Apple, Amazon, and Alphabet, that's Google, changing the market? How did the major employment numbers shock the market and change its direction for the future? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everybody, welcome to my channel. I think I got a good one. I think you're going to like the information I'm giving out here, and smash that like button if this information is useful to you. On Wednesday, February 1st, Jerome Powell put the market into a very bullish mood by the things he was saying. He was very dovish. He was very hesitant to say that interest rates were going to be increased by any significant amount. He noted that disinflation has already started to occur. The personal consumption expenditures came in at 5% when 5.5% was expected. And I think a lot of this is being driven by the oil price coming down significantly, and that will continue to come down. As Powell's going to be forced, as we shall see, to raise interest rates because of news that came later in the week, I think the price of oil is going to continue to go down, which is going to make inflation go down, which is good news for everybody and for the stock market. However, I think the interest rate is going to go up higher than Powell is currently projecting. He also said that they would consider stopping raising interest rates if the data showed it. And the data, as far as disinflation goes, is showing it. But I think he's got a very hot job market, as we shall see, that's going to force him to raise interest rates more than he's expecting right now. During the meeting, he actually said, during the interview part of it, that there was just going to be a couple more quarter of a point increases, 0.25 interest rate increases, which would bring it to about 5.25% as a terminal rate. But I think that terminal rate is going to increase. The terminal rate of the interest rate is going to be higher because he needs to raise the interest rate to decrease the price of commodities and especially of oil. That's why the oil price has been going down recently, which is very bullish for the market. And I think that's the biggest part of the disinflation that we're seeing, is that energy costs are coming down. Natural gas costs have come down because it's been a milder winter than they expected. So that's been helping also. But as he increases the interest rates, that makes the dollar stronger. We can buy commodities cheaper because we get a better exchange rate. When the dollar strengthens, we can buy oil and other commodities cheaper. Things like wheat and corn and things that we need, aluminum, all the metals, lumber, everything becomes a lot cheaper. And that's why it's such a disinflationary thing for him to raise the interest rates. He's been focused on employment, and I don't think that's nearly as strong of an effect on inflation as he thinks it is. It can be part of it, but I think the biggest part is when commodities come down. And he makes the commodities come down by raising the interest rate and strengthening the dollar. During the 1970s, unemployment was high. and inflation was high. So where's the correlation there? And then in the early 2000s, we had no inflation and we had mostly full employment. How come full employment didn't make inflation go wild? Well, the answer is the employment can be a part of it, but I think it's far less significant than monetary policy. And that's where they jigger the money supply. And they increased it so much during the health problems we were having. They increased it by giving out money. Literally, you got a check from the government in the mail. That's never happened before in my life. But they really made up for the lockdowns. They shut down the economy and literally replaced the economy. And now they got all that money floating in the system and they're trying to sweep it up. And they sweep it up with raising the interest rates. We're getting news that confirms the view that the job market is explosive and the economy is okay, probably. We're not in recession now. The gross domestic product for the fourth quarter came in at like 2.9% or something around there. And the job openings is what's really shocking. The job openings were 11 million in December. So there's 1.9 jobs for every unemployed person, almost 2 jobs for every unemployed person that there is. So you would think there would be enough jobs to go around. And it's mainly in leisure and hospitality, but it seems like the layoffs you hear are like at the mega caps, like at Google and Meta. These are high wage earners, so they could affect the economy somewhat, and there's a delayed effect because they don't get when they announce they're going to lay off 11,000 people like Google has. It isn't that they do it immediately. They do it over a period of months, and then they give them a severance package. So these people may not show up on the unemployment ranks for like 6 months, 3 to 6 months. So there's a delayed effect to that. But still, with the number of job openings there are per unemployed person, you would think that this number is going to hold up pretty good. The mega caps came in and they reported earnings, and it wasn't impressive, but it wasn't as bad as some expected, and so the market gave them the benefit of the doubt. But I think that doubt is starting to be raised a little bit after Friday's explosive employment numbers. The United States added 517,000 jobs in January. The employment numbers for December were revised upwards, okay? And then January came in at 517,000. You know, over 200,000 is considered pretty good. This was just off the charts. And it knocked the unemployment rate down. The unemployment rate fell from 3.5% to 3.4%. That is the lowest rate since 1969. Wow. So we have full employment right now. And it's hard to see that's really contributing to inflation that much, like I say, because I think it's mainly the price of commodities and oil that's driving it. But I think having less employment will help inflation come down, but not as much as reducing commodity prices like oil, in my opinion. I think it has more or less been proven now that what Milton Friedman said, that inflation is always and everywhere due to monetary policy, and mainly by how much the government is spending and interest rate policy, whether they're stimulating the economy or restricting the economy. It's basically controlling the money supply, which causes inflation. On Wednesday, Meta, previously known as Facebook, indicated that they missed on earnings, but they were going to cut costs, and they had gained subscribers, which is hard to believe. As long as they've been out, they're still adding subscribers, so that's impressive. But a big thing was that they were going to buy back 40 billion of their own stock. The stock just skyrocketed. At one point, it was up like 28%. So the stock market wasn't expecting that much from Meta, but I think that they're cutting back on the metaverse for now and are focusing on their prime business, the Instagram, the Facebook, the WhatsApp, and other things they have going on. They're a major platform. They're a major advertising platform. And they saw some improving trends in their business during the call. And so I think the stock market was just relieved to hear this. On Thursday, it might as well have been Super Bowl Thursday for the mega caps, as you had Alphabet, Amazon, and Apple reporting earnings. Wow. Amazon beat on revenue, but they missed on earnings. They were supposed to make like 17 cents per share, and they made 3 cents per share. But they did beat on revenue. Alphabet, better known as Google, missed on their revenue because their overall revenue went down 4%, and their YouTube revenue went down 8%. So advertising revenue is not good as we sort of expected. Apple missed on nearly everything, okay, both overall revenue and earnings. Their iPhone sales went down 8%. So you have these three mega caps reporting, I wouldn't say they were poor earnings, but they were less than what was expected. And the street was giving them leeway because of the hard times. And it just was not a great report. And then Friday, so you have these three mega caps report disappointing earnings, and then you get these explosive job numbers, which indicates that the Federal Reserve is going to have to increase interest rates, and they all tanked except for Apple. Apple can do no wrong, okay? Apple and Tesla can do no wrong. I think Tesla is helped by the fact that they're giving a $7,500 electric car tax rebate or tax credit, I guess more accurately. So Apple and Tesla are fine, and I guess the market's going to follow them. But I'm very hesitant to invest more in the market, given that the Fed is going to have to increase their interest rate. And I think it's a matter of time, simply because this quarter was supposed to be a good quarter. The first quarter of 2023 is supposed to be worse than the fourth quarter of 2022, which is the quarter that the earnings are reflecting. So it's supposed to go downhill, and I don't think this is, for me, a good time to invest more money in the stock market. So I'm very hesitant at this point. China, I've been both short and I've been bullish on China at times, and I think I'm giving it up as a bad habit. China simply does not have enough transparency to be able to invest in it with any accuracy. And with the rates going up on interest, the Fed raising the rates, it's lowering the cost of commodities such as oil and precious metals such as gold. So I don't think gold is investable for now until we see that the Fed is going to stop raising interest rates. So I'm out of China and I'm out of gold for sure. Thanks for listening and watching. Be sure to smash the like button if any of this has helped. And be sure to tune back in as I follow my way through this market. This is one of the most challenging stock markets I've ever seen, and I'm sure many of you have the same feeling. Hopefully, things like the Ukraine war, hopefully that'll be resolved pretty soon. Germany's sending Leopard tanks. The United States is sending Abrams tanks. We're expecting some kind of spring offensive. Things might get resolved there quicker than we expect, which would be good news. Thank you for listening and watching. I appreciate each and every one of you. Good luck to us all.